There's a lot more that goes into recording income than just invoices. This chapter will show you how to use sales receipts to record sales when your customer pays you at the time of sale. You'll also learn a lot more about undeposited funds, how to give refunds, and even how to give your customer a credit. You'll learn more about the different types of statements that you can use with your customers. Lastly, we'll show you how to use batch transactions. It's a feature that comes with QuickBooks Online Advanced. And there's other QuickBooks Advanced only features we'll show you for recording sales. So far, we've only talked about one sales workflow, when you give a customer a number of days to pay. But now we're going to move into a different workflow, where the customer pays us the entire amount right away. With this workflow, the first transaction you need to enter is a sales receipt. Sales receipts record income and record the receiving of that payment. Whenever you're actually receiving this money, it can go into undeposited funds, just like with our invoices and receiving payments, or it can go directly into a bank account. The second step in this process is a bank deposit. Now, this step only happens if you're using undeposited funds. If you used a specific bank account to make the deposit when you created a sales receipt, you don't have to make a second bank deposit transaction. But for many people, a second transaction that tells QuickBooks the details of the bank deposit is necessary. In the next few topics, you learn a lot more about sales receipts.
If you're running a retail store, a restaurant, or any business where a customer pays you at the time of the sale, you should record sales with sales receipts. To get started, open the new menu and choose Sales Receipt. The customer's name is optional on a sales receipt. It's often left blank because there's usually no need to keep track of customer names in retail stores or similar businesses. We're recording a sale for a regular customer though, M. Ming Doors, so we'll select their name. If your customer wants their receipt emailed, be sure to record their email address here so you can email the receipt when you save the entry. Be sure to also record the correct date of the sale. Payment method is where you tell QuickBooks how the customer paid you. M. Ming Doors paid us with a check, and the number on the check they gave us is 393. Now we need to tell QuickBooks where we're putting the money. You may be tempted to select the bank account where the payment is eventually going to end up. The problem with that is that this check is going to be deposited together with the other checks and payments from other customers. If we choose a bank account here, QuickBooks will think that we're depositing this check by itself. If the payment you're receiving really is being deposited by itself, the bank account is the right selection to make. But for us, since we're depositing this check with other customer payments, choose Undeposited Funds. By using this account, we'll be able to link multiple customer payments together later on. Now we just need to record what our customer is purchasing. M. Ming Doors is buying more doorknobs, and they're purchasing 5 doorknobs, priced at $25.50 a piece. Now tab, and QuickBooks shows the total here. Let's scroll to the bottom of the sales receipt. If you want to send the customer any extra messages or keep any notes for this transaction, you can enter them here. And there's also an attachments field if you want to attach any documents to the sale. Before we record this sales receipt, let's open some tabs to explain what happens when we record this sale. Let's duplicate this tab by right-clicking it and selecting Duplicate Tab. Then, in the tab that opens, let's close the sales receipt. Now, open the chart of accounts. Here, QuickBooks shows the current balance of customer payments and purchases waiting to be deposited at the bank. These could be cash and checks we're taking to the bank at the end of the day, or it could even be sales processed by our merchant services company that will be deposited later in the day. When we record this sale, the undeposited funds account will increase by the amount of the sale. Let's go back to the sales receipt. If you want to save the sales receipt and email a copy to the customer, choose Save and Send. Our customer doesn't need an emailed receipt though, so we'll choose Save and Close. Now let's take a look at the chart of accounts to see the impact of the sale on the undeposited funds account balance. It looks like undeposited funds went up by the amount of the sale, so everything is going as planned, and we'll deposit that money at the bank later. We recorded something else with that sale though. Income. We're not going to see income on the chart of accounts, but we can view it by selecting Reports, Profit and Loss. As you can see, part sales income went up by the same amount as the sale. You can see that the income is being recorded onto the profit and loss statement. If, however, the transaction is deposited later on in the day, you still need to record one more transaction. We'll talk about that next.
We always hope all of our sales go well and that there are no problems. But from time to time, there will be some issues. When a customer is upset with the products or services that you provide, you may need to give them a refund or even credit their balance. In the real world, there's a huge difference between giving a refund and giving a credit. Because of this difference, QuickBooks Online gives you two very different transactions: the refund receipt and the credit memo. The refund receipt is used to give money back to your customer. The refund receipt is much like the sales receipt because it never adjusts the customer's balance. No matter how many refund receipts you give, it will never modify their balance. A credit memo, on the other hand, does adjust the customer's balance. Use a credit memo to reduce how much a customer owes you on an invoice, or to record a credit towards a future invoice.
First, open the New menu and select Refund Receipt. Refund receipts look a lot like sales receipts. And in fact, that's exactly what they are, but in reverse. So instead of receiving money from a customer for a product or service, we're returning money to a customer for a product or service that they're returning. The customer field is optional, but if you want to have full reporting capabilities for your sales reports, then you should record a customer's name here. That will reduce the total sales numbers for that customer on reports like the Sales by Customer Summary Report. The customer we're refunding is M. Ming Doors. The date field records when the refund was issued. The payment method is how we repaid the customer. We're going to write M. Ming Doors a check. And then in the refund area, we need to select the bank account from which the money will be issued. We're writing a check out of our checking account. If this is a handwritten check, we can enter the check number here. Or if we want to print this out from QuickBooks, we can also select Print Later. That will put the check into our print queue so we can print it later. M. Ming Doors is returning the doorknobs we sold them earlier, and they're being refunded for 5 boxes of rocks, priced at $25.50 a piece. If you scroll down, there are places for the message displayed on the refund receipt, a memo, attachments, and all the other fields that you would normally expect to be on a sales transaction. Now let's open up a second tab to see the effects of this transaction. I'm going to right-click my refund receipt and select Duplicate. In this second tab, I need to close the transaction that was opened. Let's first look at our checking account by going to Accounting. Here we can see our checking account balance. Take note of that balance because it's going to go down by the amount of the refund receipt. We're also going to take a look at our reports. We want to run a profit and loss report because this refund receipt should reduce the same income account that our sale originally increased. That will be our part sales income account displayed right here. So let's record the refund receipt. Click the drop-down arrow that we have at the bottom of the screen. QuickBooks lets us save and close, save and new, and save and send if we want to email this refund receipt to the customer. Let's do that. On the left, QuickBooks shows the email that will be sent to the customer. And to the right, you see a preview of the PDF refund receipt that they'll receive as an attachment to the email. Now, let's send and close. Let's take a look at the impact on our checking account. Click Accounting. Here is our checking balance, which was reduced by the amount of the refund receipt. But what about our income account? Let's check on that by clicking Reports, Profit and Loss. And here we can see that part sales also went down by the amount of the refund. Remember, when you need to return money to customers for goods and services they return, use a refund receipt. In some cases, you may need to give a customer a credit towards future purchases. Or maybe if they currently have a balance, you want to decrease the balance that they currently owe. Let's look at an example of this by going to Invoicing, Customers. Scroll all the way down to find our customer, Weiskopf Consulting. Now we can see that Weiskopf Consulting currently owes us money. That's their accounts receivable balance at the moment. Click on their name to see the individual transactions that make up the balance. Here we can see invoice number 46 for $375. Click on that invoice to see more details about it. In the Products and Services area, you can see that we charged Weiskopf Consulting $375 for 5 hours of design at $75 an hour. Now, as it turns out, Weiskopf Consulting is not very happy with the work that we did on this design, and they've asked for us to lower their balance. Right now, they owe $375 on this invoice. They want to bring that down. Many times, people in this situation will go to the invoice, click in the amount area, and just change the amount that the customer currently owes. This would lower their balance, but the problem is that we'll have an invoice that reads a different amount than the invoice that the customer currently has. There will be one version of the invoice that says $375 and another version of the invoice that says $100 or $200. All of this has a negative impact on the authenticity of our accounting. Instead, if you want to reduce a customer's balance, use a credit memo. Let's close this invoice. To get started with a credit memo, we'll select the New button, and then under Customers, I'm going to select Credit Memo. In the credit memo, the first thing we have to enter is the customer's name. This is Weiskopf Consulting, so I'll put their name in there. QuickBooks automatically enters their email address, billing address, and other information. Now in the Products and Services area, we're going to enter the product or service that we're giving them a credit for. In this case, they weren't happy with our design work, so that's what we'll give them credit for. Select Design. Now we'll enter the quantity of the hours we're giving them a credit for. We're to give them a credit for 3 hours worth of design at $75 an hour. That totals out to be $225. This transaction does not return any money to Weiskopf Consulting because they had not paid us yet. We're just reducing the accounts receivable balance that they owe us. Here is a distracting phrase. It says, amount to refund. Don't pay any attention to that. We're not actually refunding any money to them. It's just a bit of poor phrasing, unfortunately. Before we finish, in this transaction, we can also include any messages we want to be displayed on the credit memo. Scrolling down, we also include a memo, attachments, and the same things that we've seen on invoices, sales receipts, and other sales transactions. Now down here at the bottom right, let's save and send, so we can confirm what we'll send over to our customer. Here we can see the subject that will appear on the email, as well as the body of the email. And over on the right-hand side is the PDF that they'll see attached to the email. Now I'll click Send and Close. And we can also see that the credit memo has been automatically applied to the invoice through what's called a payment transaction. So now the invoice's balance is $150 instead of the $375 that it originally was. We do have a bit of a problem though. The credit memo was automatically applied to the invoice. QuickBooks didn't ask which invoice we wanted to apply it to. It didn't ask us if we wanted to apply it to anything at all. It just did it automatically. This feature works perfectly well for some people, but what if you have a customer that has multiple invoices? How does QuickBooks know which invoice to apply the credit memo to? If QuickBooks has to choose, it chooses the oldest invoice. If you want to have more control over which invoice QuickBooks applies that credit memo to, you need to edit your settings. The next topic will cover settings for credit memos and how to apply credit memos to the invoices you choose. To see the settings that govern whether or not a credit memo is applied automatically to the oldest invoice, click the gear icon and click Account and Settings. From the left, click on Advanced. Then click in the area labeled Automation. Now we can see a setting called Automatically Apply Credits. This setting tells QuickBooks to automatically apply credit memos to the oldest invoice. Click to turn this off, and then click Save and Close. Now we can choose which invoice we want to apply the credit memo to. Weisskopf Consulting is still not satisfied with the design work that we did for them. So let's click on the New button here to create one more credit memo for them. Up here at the top left, we're going to enter Weisskopf Consulting again. And down in the Products and Services area, we'll enter Design again. And this will be a credit memo for just 1 hour worth of design, worth $75. Remember, you can also email credit memos, but this time we'll just save and close it. Now if we go look at the Customers page, we can see that this credit memo has been created, but it has not been applied to the invoice here. This is still a balance of $150, and the credit memo still has a balance of -$75. In fact, we can see right here in the status area, it says unapplied. So let's apply it. If you wanted to save some time, you could also wait until you actually receive payment from Weisskopf Consulting to apply this credit. You don't necessarily have to do it right away, but if you would like to do it immediately, all you have to do is click Receive Payment. As we scroll down, you can see the -$75 balance on the credit memo. Up at the top, we can see the amount received as 0. So all we do now is save and close, and that creates a payment transaction which links the credit memo to the invoice. Notice that the payment is for $0. We didn't actually receive any money. If you want to reduce a customer's balance that they owe for accounts receivable, use a credit memo. Your customers are probably accustomed to having information at their fingertips in an instant. One thing you definitely want them to access anytime is information on how much they owe you. And they often want quick proof of when they've paid you. Luckily, there are multiple delivery options, including emailing customers one at a time or as a group. Once you enter a transaction, QuickBooks offers choices on how to finish or send a transaction. At the bottom right is a green button with a drop-down arrow. When you click the drop-down arrow, you see these choices: Save and New, Save and Close, Save and Share Link, Save and Send. Save and New saves the current invoice and then opens a new blank invoice. This is great when you need to create multiple invoices in a row. Save and Close will save the current invoice and then close the window. Once it closes, you will be back on whatever screen you were on before. Save and Share Link gives you a web browser link that can be shared with your customer. This allows them to view a copy of the invoice without having another email clog their inbox. Click Not Right Now to go back to the invoice. If you have the customer's email entered here at the top, you can click Save and Send. This will save the current invoice and bring up a window with email settings. You can choose the Sent From address here. Note that this email will not actually send from this email. It will only look like it did. This will help your customers notice your company information, and it will help prevent the invoice from being flagged as spam. Next is the customer's email, and here you can edit the subject line of the email message. You can also change the body of the email. When you're finished, you can view a preview of the message the customer will see, and then click Send and Close. But I want to show you another trick on the invoice. Click the X button at the top right to go back. Not only can invoices be sent individually, but we can have QuickBooks send all of our invoices in a batch. If you click this button at the top, you can send this invoice later with all the other invoices that have this field selected. There's another field similar to this down here under Print or Preview. Print Later allows you to print your invoices in a group instead of one at a time. Now that you have selected Send Later, where do you go to find these invoices later? Click Save and Close. Click Invoices and then All Sales. Here are all of your sales transactions, but we only need to see transactions selected to be sent later. Click Filter and then Delivery Method. Here you can choose Print or Send Later. Choose Send Later. Now you can select all of these transactions with this box. Click Batch Actions, then Send Transactions. Whether you keep up with your customer invoices one at a time or all at once, QuickBooks offers you many options for getting invoices to your customers.
Next, you prepare customer statements. You would send a statement to a customer for two different reasons. First, to remind your customer of their balance on the invoices you've already sent. Or secondly, to list additional charges or additional credits to a customer's account. There are three types of statements in QuickBooks Online: the balance forward, open item, and transaction statement. The balance forward gives a detailed information about a specific date range that you choose. It summarizes anything before that into a single balance forward line. The open item statement shows any transaction open on the customer's account. This statement will also show any transactions that are affecting accounts receivable and that balance. Lastly, the transaction statement shows all activity in a date range and gives totals for all of those transactions involved. You'll learn a lot more about these transactions and how to send statements and why in the next chapter.
There are two paths to create customer statements. First, you can click on the New button and then select Statement. This opens the statement screen. Alternatively, select Invoicing and then click on Customers to go to the Customers list. From there, select Customers with these checkboxes over on the left-hand side. Once you've selected the customers, click on Batch Actions, Create Statements. Let's create a statement for all of our overdue customers. To do this, click on the Overdue filter up at the top of the customer screen. Then click on the checkbox next to the word Customer. Now that we have all of our overdue customers selected, we'll click Batch Actions, Create Statements. In the Statement screen, QuickBooks automatically selects the Balance Forward statement. Up here at the top right, we can see the total balance for the customers that we have selected. There is a statement date, which defaults to today's date, as well as a start date and end date. Now, when we're talking about balance forward statements, what the customer will be sent is a statement that tells them the amount of money that they owed one day before the start date. It will also include each individual transaction that affects their accounts receivable balance between the start date and the end date. And down here in the recipients list, we see who will receive a statement as well as their balance. Let's go ahead and print or preview these to see what a balance forward statement looks like. Here's the first statement. The balance forward is up at the top. That's what they owed one day before the start date. And then below are all the transactions they've had with us between the start and end date. Scrolling down, we see the aging information. We see the amount that is currently due, as well as any amounts that are overdue and the period of time that it is overdue. At the end, we see the total amount due. We can print statements out by clicking the Print button down in the bottom right, or in the Statement window, we can click Save and Send down at the bottom right. If you have emails set up for your customers, you'll be able to email all of the statements out in a batch to your customers. In the next topic, we'll discuss open item statements. In this topic, we'll talk about open item statements. To understand the difference between a balance forward and an open item statement, let's first take a look at the balance forward. Remember, the first thing we see on a balance forward statement is the balance forward, which tells the customer how much money they owe as of a certain date. Below that is a list of all transactions that affect accounts receivable during your chosen date range. Looking at their statement, a customer may wonder how he got that balance forward. Maybe they look at the statement and they think to themselves, gee, I don't know why I have this balance forward. In that case, you can use the open item statement. QuickBooks gives us the open item statement to tell the customer exactly how much they owe, and also why they owe it. Let's close this statement and then change the statement type to Open Item. Now let's click Apply and click Print or Preview. For this customer, at the top, we can see the specific invoice that was reported under the balance forward. Under the invoice, we'll see any other open invoices or credit memos that they have with us. There is no date range on this statement. It only shows you any current open invoices and any currently open credit memos. In the next topic, we'll learn about how to display all sales transactions regardless of whether they have affected accounts receivable or not. So far, we've only seen statements that affect accounts receivable. But if you want to tell the customer how much they've spent over a period of time in terms of their invoices and their sales receipts, or if we're in a nonprofit organization and we need to report the total amount of donations over a period of time made by a specific donor, we need a different statement. QuickBooks offers us a third statement called the transaction statement. Right now, we have all of our overdue customers selected. Let's deselect that filter. And instead, let's look at some customers that we have some sales receipts with, and perhaps some refund receipts if business didn't go quite as well as we would have liked. Let's select M. Ming Doors, that we sold some doorknobs to, that came back as being defective. Now I'm going to scroll back up and click on Batch Actions, Create Statements. We want to create a transaction statement. Choose that type, and then Apply. Here we can change the start date to be whatever we would like. For example, let's change the start date to the beginning of the year. Click Apply. Here we can see M. Ming Doors on the recipient list. Now select Print or Preview. You can see this sales receipt and also the refund they received from us. Again, these transactions would not show up on a balance forward or an open item statement because they do not affect accounts receivable. They appear on the transaction statement because it's the only statement that reports transactions that do not affect accounts receivable. This is a very useful report for nonprofits that need to report donations over the period of a year. All you have to enter is the start date and the end date, perhaps the beginning of the year until the end of the year, and that will give you all of the donations that are made over the period of an entire year. You can even save and send those out. That way they'll have all the information they need for reporting their taxes. Remember, customer statements allow you to communicate information to your customers about their balances and transactions they've had with your business.
Bookkeeping bookkeeping is tedious. Unfortunately, there's no way to completely avoid that. It's just the nature of accounting and bookkeeping. But QuickBooks Online Advanced does have a feature that can help remove some of the tedium of all of this data entry. If you use a version of QuickBooks Online that is not QBO Advanced, and you have a lot of invoices to record, you have to record each one individually. Then you click Save and New, and you enter another invoice. Save and New, and so on and so on. But with QBO Advanced, you have access to a window called Batch Transactions. In that window, you can record the details for as many transactions as you want, and then save them all at one time. You can also use this window to invoice and copy one invoice into multiple customers. Then, when you're done, you can email all of those invoices in a batch. In the next topics, you'll learn the basics of entering invoices in a batch.
Select New to get started, and then Batch Transactions. You can record batches of invoices, checks, expenses, or bills from this form. Let's focus on invoices for now. At the top, you'll see a column for everything you can record on an invoice. Your options may be different based on your settings. First, enter the customer you want to record an invoice for. QuickBooks automatically numbers your invoices, picking up where your last invoice left off, but you can change the numbers if you want. If you already entered a customer's info, QuickBooks enters their email address, terms, and other info for you. You can also fill it in on this screen. In the Product Service column, select which products and services you're charging your customer for. If you want to track the quantity of a product or service sold, fill that in too. If you're charging someone for more than one product or service, move your cursor over the Product Service column and select the plus button. This gives you another line to enter more products and services. Keep adding more lines until you have all you need to finish the invoice. Then record the rest of the data for the sale. Treat it like any other invoice. Decide whether or not you're charging sales tax for the product or service, record any shipping charges, etc. You can also mark an invoice to be sent later if you need to. We recommend sending them off on this screen after you've filled everything out. Once you've entered everything you're charging a customer for, QuickBooks shows the invoice total on the top line. Now scroll to the left and start another invoice. This is how you batch enter and send multiple individual invoices at once. If you're sending the same invoice to multiple customers, select the box to the left of the invoice and choose Duplicate Invoice for multiple customers. Select the drop-down menu and choose another customer you want to send the identical invoice to. Select as many as you like and then select Next. QuickBooks copies the invoice for all the customers you chose. You can edit specific invoices before finalizing and sending them. Just select and change any information as needed. You can also remove products and services from an invoice. Move your cursor over the product service you want to get rid of, and then select the minus button. You can also delete invoices if you change your mind. Select the box to the left of the invoice and select Delete Invoice. Once you're finished, you can save and print or save and send your invoices to customers. Select OK. Now you're ready to save time by recording invoices in a batch.